This video we are still continuing with our preparation for the paper 2 accounting final examination. We are looking at the paper 2 scope using 2024 questions from our preparatory examination paper from the Gauteng paper this September. This video we are going to specifically focus on the topic of stock valuation and VAT. We have already done reconciliation and cost accounting, so if you missed those two videos, make sure you look at them before you look into this one. So getting into our stock valuation and VAT, what is expected of you? In stock valuation particularly, you expected to be comfortable with knowing how to calculate your closing stock using the FIFO method and also calculating it using the weighted average method. You need to be able to know what is a specific identification method and how it works. You also have to be comfortable with calculating your closing stock using the periodic system, and also know what is the difference between using the periodic system and the perpetual inventory system. But for the sake of the exam, what is most likely to appear is the periodic system, so you need to be able to be comfortable with that, and then also be able to calculate the amount of stock that's missing or stolen. And then when we get to VAT, you need to be comfortable with calculating your VAT payable and VAT receivable, and also know which VAT fractions to use and when to use them. So let's go ahead and get started with the stock valuation question. We have a 3.1 which deals with our concepts for stock valuation. It says choose the correct term from those given in bracket, write only the term next to the question number. In 3.1.1 it says the FIFO or weighted average method assumes that stock is sold in the order of purchase date. Now when you know what FIFO method is, you know that it stands for first in, first out. It means that whatever we purchase first is what we sell first. So our correct answer here would be the FIFO method. We sell them in the order of the purchase date. And then in 3.1.2 it says merchandise purchased is recorded in a trading stock account in the perpetual or / periodic inventory system. Now when it comes to the difference between perpetual and periodic inventory system, is that periodic only records at the end, whereas perpetual inventory system, they open a trading stock account and they record the stock every time it is purchased. So the correct answer there is perpetual inventory system. And then the last one says the weighted average / specific identification stock valuation method is best suited for unique high value products. So unique high value products, it means that they're valued individually, so they're identified individually. So the correct answer there becomes the specific identification method is for high value, meaning high price goods that you can identify individually. And then in 3.2 it says you are provided with the information related to Malaza Soap Traders. He sells a single brand of face soap. The financial year ends on 29 February 2024. The periodic inventory system and the weighted average method are used to value the stock. So like I said, you will find the periodic inventory system, meaning the one that records only at the end. So in 3.2.1 they say calculate the value of closing stock on 29 February 2024. Now remember they said for valuation they are using the weighted average method. When you use the weighted average method, before you calculate anything, you need to know your average weighted price or your weighted average price. And the formula for your weighted average price is total purchases divided by units purchased. When it comes to total purchases, I'm talking about the units that you opened with, meaning your opening stock plus the ones that you purchased, and if you returned anything, those needs to be subtracted, and then you will also divide by the units of opening stock plus the units of purchases minus the returns. So when we look at information A, we get the value of our opening stock on 1 March 2023. We see that the value is 174,400, and then it also goes, the number of units for that value is 4,800. And then we see that our closing stock is 5,650, but we will get to that let's go and find our purchases. In the meantime, our purchases value is 956,400 and the number of units purchased in total is 19,500. And then you will also see down at the bottom we have 15 December 2023. They show us that we returned the units that were of 100 units. We don't know the value, so we have to go and calculate the value. Now we can assume that these units, because they were returned on the 15th of December, they can be from the last batch that was purchased, which was that one from the 10th of December. So it was for 3 rands. And we also have a note that says the supplier agreed to refund the transportation cost for the goods returned. So when we look at our information B, it says carriage on purchases of is 200 per box of 100 bars of soap. So when we calculate our returns, we are going to say we returned 100 units, so multiply by 53 rands, it gives me 5,300. And then that 5,300, I'm going to add to it the 200 of the transportation, because the transportation was refunded as well. And my returns give me a total of 5,500. Now that I know how much I returned, let's go ahead and calculate my weighted average price. So for my weighted average price, remember the formula said opening stock, and we said our opening stock was 174,400 plus purchases of 956,400 minus the returns that we just calculated, which were for 5,500. Divide now by the units. The units of opening stock were 4,800 and the units that we purchased were 19,500 minus the units that we returned, which were 100 units. And then that gives me my weighted average price of 46 rands 50. Now that we have my weighted average price, I can now go ahead and calculate my closing stock using this weighted average price. So what I need for my closing stock now is just the number of units for my closing stock. So when I look at information A, it says stock on 29 February 2024 is 5,650 units. So that 5,650 units, I'm going to multiply it with my weighted average price of 46 rands and 50 cents, and it gives me 262,725 as my closing stock. So anytime you are dealing with a question of weighted average method, the first thing you do is calculate your weighted average, and then the closing stock, you just find the number of units and then multiply it with that weighted average price. So the big thing here is to figure out what is your weighted average price. And then in 3.2.2, it says calculate how long in days it will take to sell the closing stock. So this is similar to the indicator of the period of stock on hand, except now we are trying to sell the stock that is on hand. So we are going to create a different formula. It's going to be closing stock all over our total purchases minus our closing stock, and then you multiply everything by 365 because that is the number of years. So we just calculated our closing stock in the previous question and it gave us 262,725. So that's what we put as our closing stock. And then under total purchases, we said our total purchases includes opening stock of 174,400 plus purchases of 956,400 minus the returns of 5,500, and then we can minus our closing stock that we just calculated again of 262,725, and then we multiply the whole thing by 365 days of the year, and that gives me 111.2 days to sell my stock. So we are saying, in other words, that the closing stock that I have on hand, this is how long, this is the number of days is going to take me to sell that stock that I have on hand. You are not required to round off the number, so you can write it just as it is with its decimal. The most important thing is that after you get your answer of 111.2, you put days next to it to show that you are dealing with a number of days, because with indicators, some of them have times, some of them have percentages, and some of them even have decimals. So we need to know what you were calculating. You were calculating the number of days, so make sure that you put that days at the end of your final answer. And then the next question says, the owner suspects that bars of face soap are being stolen. Provide a calculation to confirm this suspicion. Like I said, one of the expectations of this topic is you are going to have to be able to calculate the number of stock that's missing or that's being stolen. So how do you do that? You have to take your opening stock and plus your purchases minus your returns minus the amount that you sell and minus closing stock, and whatever is left will be the number of stock stolen. The reason for this calculation is that we are basically saying that when I take my opening stock and I add to it everything that I purchased, what I would have is everything that is supposed to be in my storeroom. And if I minus the one that I returned and the one that I sold and the one that is on hand in my books, what I'm supposed to remain with is zero. Hence I say in the NB there, if the answer is zero, it means no stock was stolen. That's what we are trying to achieve. It would be good if my answer is zero, but if it's any number at all, it means that those number of goods were stolen. So we start with opening stock and we see that the units is 4.8. We are only dealing with units, by the way. And then we look at my closing stock. I see that it's 5,650, and then I'm going to go ahead and look at the number of units that I purchased. To remind ourselves, it's still 19,500. And then also looking at the number of units that I returned. Remember, it was 100 units that I returned. And then also remember, now we are including in our calculation the stock that I sold. So the stock that I sold is there in information D, and it tells me 8.5 units were sold at 75 rands each. So all of these numbers, I'm going to put them together now in accordance to my formula. My formula starts with opening stock. My opening stock was 4.8. I add to it purchases of 19,500. I minus my returned units. They were 100 units. I minus my sold units. Remember, they said there were 18,500 units that were sold for 75 rands. So that's minus my units sold. And then finally, I'm going to minus my closing stock. We know that my closing stock is 5,650, and my answer is 50 units. This 50 units, it basically means there is 50 units stolen or missing. In this case, we were suspecting a case of stolen, so we will say 50 units stolen. In 3.3, we are dealing with management of inventories. It says the information relates to chill wave coolers for the financial year ended 31st July 2024. The business sells one type of cooler box in 3 branches. The business credit terms are 30 days. Required: provide one distinct problem with figures relating to each branch with a corresponding solution for each problem. So we have 3 branches: Sidibeng, Tshwane, and Mohali City. When I look at Sidibeng, to start with, I'm seeing that I have opening stock of 300, purchases of 3.5, and a closing stock of 2.9. That is my first concern, because when I add my opening stock with my purchases, it gives me 3.5. When I minus the closing stock, it gives me 600. So that means in the whole year with all the purchases, how can we stock 3.2 units and only sell 600? And then when I look at Tshwane branch, the first thing that's standing out there is the drawings. Drawings, remember, is the owner taking some of the stock for personal use, and that means he took 15 cooler boxes for personal use. This is bad for business because this is money that could be coming in. When I look at Mohali City, I'm concerned about the debtors collection period, particularly because when you compare it with the creditors payment period, you see that we pay our creditors in 31 days, but our debtors only pay us in 40 days. So the question becomes, with what money are we paying our creditors? So let's start with Sidibeng. Sidibeng, we said they have a very high closing stock of 2.6. They only sold 600 units. How did I get 600 units? It's 3.5. That's the 3.4 of purchase, 3.2 of purchasing, and the 300 opening stock, and I minus the 2.9. Now, what is the solution for a slow sale or very high closing stock? Well, very high closing stock basically means that we are not selling fast enough. So the solution is advertise more to increase sales, because the more I advertise and my sales goes up, it means that I'm going to sell more units, which means my closing stock will go back to being small as it should be, and I'm going to sell a little bit more units. And then when we get to Tshwane, we said that the drawings are too high. That's 15 units that were taken for personal use. If you want, there you can even include the price. The prices of each unit, if you looked at our information, it was 1.2 each. So 1.2 times 15, that will give you a very high amount. And then what is the solution here? The solution here is that our owner needs to separate his personal and business finances, because that means instead of using money to buy the cooler boxes, he's just taking them, and that is him mixing personal and business, which they shouldn't mix. And then in Mohali City, we said that the debtors take too long to pay. They pay in 40 days. If you want, you can even include that part about the us paying our creditors in 31 days. But they did say only one problem, so because it's one problem, we can just state one part of it. What is the solution? The solution is that they need to charge interest on late payments. If you want, an alternative solution can also be charge give discounts for early payments to encourage early payments. Shifting gears, now we can move on to our VAT question. We have buyer traders who is registered for VAT. The VAT rate is 15%. The first question in 3.4.1 says calculate the amount of VAT payable to SARS for the period ended 31st July 2024. When it comes to calculating VAT payable, you need to know what we are adding and what we are subtracting. So we have two kinds of VAT. We have VAT input and VAT output. VAT input is an input that is incurred on purchases and expenses. This amount of VAT, you can claim it from SARS. So because you claim it, it means that it minuses the payable, meaning it reduces the payable. Since we are calculating the money that we're supposed to pay to SARS, this means that for any amount that is for purchases or any expense, I'm going to subtract it from my amount that is payable to SARS. And then VAT output is on sales or any form of income that is coming to me. When money comes in, I need to pay SARS. That's why we are saying that it adds to the payable. That's why we say it's a plus to a payable. So when we look at our information, any amount that is a purchase or an expense, we are going to minus. Any amount that is a sale or an income, we are going to add. So our information starts with an amount owed to SARS for 6.3. This is owed to SARS, so that means we are adding it to a payable. It's already a payable on its own. So my calculation there is going to start with a positive 6.3, and then the next amount is going to be sales returns. You see there it says the amount including VAT is 6.9, but I don't have the VAT amount, and what I do want is the VAT amount. How do I get the VAT amount? I take the 6.9, because it's in excluding VAT, I'm just going to multiply it with 15%, and it gives me 1035. The 1035, I'm going to minus it. Why? Because it's a sale return. I did not make the sale, so they can't charge me VAT on the amount that I didn't receive. It means those people returned that amount. And then next I have purchases of stock. They calculated the VAT amount for me already. It's 3075, so I'm just going to minus it, because purchases reduce my sales, my payable amount. And then next I go to my discount allowed. My discount allowed is 780 excluding VAT. I want the VAT amount, so I'm simply going to say 780 multiplied by 15 is equals to 117. The 117, I'm going to minus it as well because I did not receive that amount since I gave the person a discount. Remember, I only add what I received. So if I didn't receive the amount, I minus it. Bad debts recovered. These are people who used to owe me. I call them bad debts, but now they have come back to pay me, which means that it's an income. So I'm going to plus it at 240 because they already calculated the VAT amount for me. And then next we have credit sales. Credit sales, it means this is an income. I don't have the VAT amount, however they gave me the value including VAT. And then they gave me a note that says this amount includes zero rated goods that should have been sold for 5,060. The bookkeeper has incorrectly included VAT for 660 for these goods. This must be corrected. How do we correct it? We need to minus that 660 because this was supposed to be zero rated goods, meaning the VAT on them was supposed to be zero. So our calculation starts with the 72,450. Because it was an amount including VAT, we are going to use the fraction 15 over 115 and it gives me 9,450. What do I do with the 9,450? I minus the 660 and it gives me 8,790 that I'm going to add because this is an income. Remember, it's an amount of credit sales. And then my total payable to SARS is going to be 11,103. And then you say it's payable to SARS. And then the last question says you are the internal auditor. The owner Ali Buyer transferred 12,880 including VAT using an EFT to IT Solutions for new laptop for his child who will be starting his tertiary studies. Ali insists that the laptop must be recorded as part of Buyer Traders equipment and 1,680 must be recorded as VAT included in the business's books. Explain what you would say to Ali. Provide 1 point. Now remember, business and personal are not supposed to mix. What Ali is trying to do is that he's trying to reduce the amount that he owes to SARS. He's trying to say this is an expense for the business. Remember, for the expense we minus that amount. So he's trying to minus that amount and he is not allowed because this was not for the business. This is tax evasion. It is unethical and illegal. So that would be your answer to that question. That concludes our scope for stock valuation and value added tax. Next, for our last topic and our last question on paper 2, we are going to be looking at budgeting. So make sure you turn on your post notification bell on to be notified for the next upload. To have YouTube recommend you more of my videos, be sure to click the like button and subscribe to the channel. And if you have any questions, leave them in the comment section below.